If every country is in debt, who are the creditors? At some point, you've heard it said quietly, almost casually. The country is in debt. It's said on the news, in passing conversations, sometimes as a joke. But no one ever finishes the thought. No one ever asks the obvious question. If a country is in debt, who exactly is waiting to be paid? Because debt doesn't exist on its own. It never has. For every borrower, there is a lender. For every obligation, there is a claim. So if nearly every country on earth owes money, someone, somewhere, must own that debt. And the answer to who owns it quietly affects your life far more than you've been told. The debt we're told not to think about, national debt, is often described as a future problem. Something abstract. Something distant. Something your children will deal with later. But debt doesn't wait politely in the future, it works in the present. Right now, governments borrow to pay salaries, fund hospitals, build roads, stabilize economies. Nothing unusual. Nothing dramatic. And yet, year after year, the numbers grow. Trillions become normal. Deficits become routine. Borrowing becomes expected. And still, no one points clearly to the creditor. Because once you see who gets paid, you start to understand how you pay. The first truth. Most people never hear a large portion of government debt is owed not to foreign enemies, but to people inside the country. Pension funds. Insurance companies. Banks. Investment funds. And behind those institutions, ordinary people. When a pension fund buys government bonds, it's lending money to the state. When a bank buys treasury bills, it's using depositors' money. When retirement savings are invested in safe assets, those assets are often government debt. So the government isn't just borrowing from the market. It's borrowing from future retirees, long-term savers, workers who want stability, quietly. Legally. Systematically, in a way that feels safe, until you realize what that safety depends on. When countries owe each other. But the story doesn't stop there. Countries also lend to other countries. One nation runs a surplus. Another runs a deficit. The surplus gets recycled into bonds. The deficit gets financed. China holds foreign debt. Japan holds foreign debt. Europe holds foreign debt. The United States holds foreign debt, and is also the largest debtor on earth. It looks like power. But it's actually interdependence. A web so tightly connected that pulling one thread shakes the entire structure. No country is purely the lender. No country is purely the borrower. Everyone owes. Everyone is owed. Which brings us back to the question. If everyone is both debtor and creditor, who is really in control? The quiet role of the financial system. Here is where the story turns. Most people assume governments borrow money that already exists. They imagine vaults, piles of cash, stored wealth moving from one place to another. That's not how it works. In modern economies, money is created through debt. When governments issue bonds, banks buy them, institutions buy them, central banks support them, and in that process, new money enters the system. Money doesn't appear first and then get borrowed. Borrowing comes first. Money follows. Which means something deeply uncomfortable. Much of the money in circulation exists because someone owes something. Debt isn't an accident. It's the foundation. Why national debt is never paid off. You may have wondered why governments never just clear the balance. Why they don't tighten spending, pay everything down, and start fresh. Because doing so would remove money from the system. Less debt means less liquidity, less spending, less growth. Entire economies are built on the expectation that debt will roll forward. Old debt gets refinanced. New debt replaces it. Interest gets serviced. Not eliminated. Managed. The system doesn't aim for zero debt. It aims for continuity. So who actually gets paid? On paper, creditors receive interest. Bondholders earn returns. Institutions collect yields. Funds remain solvent. But in reality, repayment often happens in a quieter way. Through inflation. When prices rise, debts become easier to manage, currency loses value, purchasing power slowly erodes. No one sends you a bill for inflation. No one asks for consent. Savings quietly buy less. Wages lag behind prices. Costs feel heavier than before. This isn't punishment. It's mechanism. A system-wide adjustment that spreads repayment across millions of lives instead of one dramatic default. The part no one likes to say out loud. So if every country is in debt, who are the creditors? They are your pension fund, your bank, your savings, foreign institutions, and indirectly, you are the lender, the borrower, and the one absorbing the cost. Not through a single event, but through time. Slowly. Quietly. Legally. The unspoken ending. This isn't a conspiracy. It isn't a secret meeting in a dark room. It's a system built on trust. Trust that governments will function. Trust that money will hold meaning. Trust that tomorrow will look enough like today. As long as that trust exists, the debt continues. Not as a crisis, but as a condition. And the real danger isn't debt itself. It's not understanding your place inside it. Because money doesn't usually fail people. Unspoken decisions do.